It's important that we keep an eye on it. Well, I don't know, fortunately or unfortunately, it works differently in this part of the world, right? So when I came in, I had to unlearn certain things, because back home it is cash driven, but here it's credit driven, and that can push you into a lot of debt if you're not careful. So for people over here, I would say, try to unlearn certain things, because some people will tell you, oh, they would never spend the credit card. Oh, no, it's not going to put me in debt. But if you use it wisely, right, it will help you build credit scores, right? Another thing I also say is self-discipline is very huge, and try to invest as early as possible. Like you said, okay, you started investing very early. And honestly, as it is now, my kids have life insurance. And a lot of people have different, different notions when it comes to life insurance. They tell you, oh, it's only when you die, but that's not the case. And that's not true. That's a misinformation. So try to invest as much as possible, get life insurance. There are a lot of vehicles here, like the tax-free savings account, the registered retirement savings account. There's the first home savings account. There are lots of vehicles that you can use for investments here, and when you start them early enough, it will help you build your retirement planning. You can retire very well. So these are the things I'll say. And I also say, okay, while you invest as an adult, try to also invest for the children as well. It gives them a very huge head start in future compared to their peers. It will help them and to give them a very good head start.
Okay. Well, I mean, those are very key words. And yes, I hear all the investment tools that you mentioned. I have some reservation about some of them, and I was hoping I will be able to ask you about them. But yes, they are very key. They are essential for us to invest. Investing for kids now, I'm wondering how does that work? Because I know in the US, yeah, I think it's kind of easier for you to be able to start building them up financially. But here, it's a little bit, that here, when I say here, maybe Canada, is a little bit different. So how can kids, get into investments?
Okay, so there are two ways, right? So the popular one would be the RESP, that's the Registered Education Service Fund. So that is strictly for college. You're just getting that, aside strictly for college, and the Canadian government, would always pay in, I think about $500 every year. But another way you can leverage, which is what I did for my kids, is that I got them life insurance. And the kind of life insurance you get, especially for kids, I would advise the universal life insurance. You see, the universal life insurance has two components to it. It has life insurance component and it has an investment component
in it. If you say kids, what age are you looking at?
From 1.
Age 1?
My little cousin, we invested for her. She just turned a year and 4 months. So we invested for her from 1. So you can start as early as 1.
Okay.
The only time the insurance companies might have a reservation is when the child was born premature. As long as the child is not born premature, you're good to go. I tell you that my kids' investment, their insurance, by age 18, they will be able to have a cash value of about 100,000 in that insurance.
And they can cash it out.
Yes. So that's the thing people don't know about insurance. And I would want to say, I would leave my, Calendly handle, and anybody, if you want to know more, I'll give you a very thorough one. Yeah. Because you see, that's what it's an unpopular strategy people don't know. Even most of the Canadians don't know this, that you have cash value built in the universal life insurance. And this cash value, you can cash it out anytime you want. As long as that investment has stayed 2 years, 3 years, you can start cashing it out because the cash value would have built over time, right? And secondly, so what happens is the investment, let's say you're investing $100 a month. $50 would likely go to protecting your life, right? The other $50 will be invested. You get to choose which companies you want to invest them in. For me, I usually like to go with the S&P 500. That's the US large capital. And I also want to go with Canadian equity. And I want to go with the US new technology. Investing in this, I've studied the history over time, and they've done very well. So this investment will continue to build value in it. And for kids, once they turn 18, you can hand over the policy to them at that age. Because for now, when you get it, the policy is going to be, you are going to be the owner of the policy, while the child will be the insured, right? So you will be the one funding that policy until the child is 18. When the child is 18, you can transfer the policy to the child.
They can cash out.
Yes, and they can cash out. Okay. And guess what? Their first home, they can get that money from it and invest it in getting their first home.
Yeah, that gives them I'm saying. If they can cash out at 18, meaning at 18, they can buy their first home.
Exactly.
And build other assets, buy their car, pay for their college, and all that. Okay.
Yeah. So if you have the one for their college, which is the RESP on the side, and you have the life insurance on the side, that child is made. For my children's policy, when my children turn 30, they are millionaires. So this is a legacy you have to drop for your children early enough. You don't have to die before the children can start claiming.
You need to do a will. Just do this one and hand it over to them.
Just do this one and they are made for life. Honestly, when I discovered it, I was like, what? I wish my parents knew this, or I wish we had this back home, right? So I would encourage anybody in Canada, to do that. It's a legacy you're dropping for the kids, and they will thank you for it, honestly.
So Bolariwa, do we have something similar in Nigeria or close enough that people can take advantage of? Especially, again, I like the art component of the kids, because we are working and we are doing all these things for the kids.
Exactly.
Hopefully, when they are 18, they have $100,000, and 100,000 hopefully is still 100,000 in value. And Nigeria also matches up to say 100,000 naira is also close to $100,000. That would be great investment to pass on to the kids. So, do we have anything similar?
Okay, so for us in Nigeria, and thank you. I want to even ask some questions, but let me. Yeah. So for us in Nigeria, what we have is that we are popular is the trust, and this why I said trust. So most people, even with their insurance, you see them bringing their insurance into a trust.
Yes.
To say, should anything happen, I just want a similar. So instead of arguing over the children, we are the trustees are like the what they call it now?
You are the one governing the fund.
Yes.
I think we have that as well here.
Proper one is done, so it's seamless. That even if the eventuality happens to the person doing it, nothing stops, because the insurance ensures that the desire of the principal is fulfilled, and the trustee too will now ensure that what you are set aside, why you are setting this aside, those things, you are giving something out for your children's education. It's the place of the insurance system. I don't know if that's how it plays out in Canada, but in Nigeria, if I'm doing insurance now and I say, the reason for doing insurance is that I want my child to go to an A-rated high school, of course they will come up with, be able to save this every month or every quarter, depending on how you earn. And eventually, maybe along the way, something happens and I'm no more. The insurance company ensures that is fulfilled. So if what I'm supposed to save is $100,000, if that's how it works, right? And by the time you are doing that, in the trust will now ensure that $100,000, that child must attend that Harvard school, must attend that school in which this testator as shown. So it's just because we don't really have, like I said earlier, the insurance part is not really so popular. You just look at, when you bring insurance, I'm not dying, God forbid, all those kind of things. So it's easier to introduce the trust towards the Nigeria. But the trust is like, even though we don't like saying it, but it's like, we call it like a living will. So you have an idea of how your life after will be. Even the child is aware.
Hmm.
My United Capital Trust is 60 years. It costs 60 June 1st. And I can tell you that there are lots of beneficiaries right now that we are paying their fees. And even when those trusts were initiated, they were not even born, but they are enjoying it. And the estate, the asset what the yield from it is coming to play, and they are fulfilling the testator's desires. So what we have here is that do the investment, do whatever you have, but it's probably the trust just adds like a cover. Just like I don't just give scatterly, just have something, a cover to say all these reasons, all the things you are doing, all the reasons why you are putting this together. You want your beneficiary, you want your children to live a good life. The trust is we ensure that
that happens. And that brings me back to, and Rachel, I know I told you I was letting you go, but then other questions are coming up.
No, it's fine.
If you have questions, pop them in. And this brings me back to you. So for instance, God forbid, the principal passes on. Does the insurance still, how does that work? How is the child or the kids, so how are they protected?
Okay, good. So naturally, insurance, the common idea people have about it is, when you die, your family gets to benefit, right? A death benefit is paid out. So that still works. So let's take, for example, an insurance of, let's say, 1 million Canadian dollars as a death benefit. When the person passes on, 1 million is paid to the family, and is paid out according to how the owner of the policy wants it, right? So the beneficiaries are allocated different portions or different percentages. You can allocate maybe to, for example, you have 3 kids, and your spouse, you can allocate maybe 25%, right? So that's 1 million is going to pay in 25% to all 4 of your dependents upon the person's passing. So that's how it works. I have witnessed a claim. Before I delved into finance, I did a lot of research on, is this true? I can tell you that most of the insurance companies in Canada most of them, especially one like Ivari, is over 90 years in existence. So it's as solid as you can think. And there's a body called Assuris. Assuris protects you up to 90% if your insurance value is above 1 million.
My question was not even based on their, to be sure they were going to pay. It was more of, I think my concern is more, so for instance, especially for young families or people with kids or stuff like that, once they pay, the kids have the money. They can decide to squander it. They can decide to maximize the potentials of that fund. But does the insurance, for instance, company has the maybe responsibility of, just like Bola said, managing the funds to ensure it is used for what it's supposed to be used for? So almost like a role of a trustee to say, these funds, we are giving you $25 million. This goes to school, so we are only going to pay this into school. This goes to you buying a property at this age. We are only going to do that. Or do they just give you a bulk sum? If you like, use it to play lottery. That's your problem. Is that how it works?
Okay, so, it works both ways. Okay. For universal life insurance, it is self-directed.
Okay.
You get to decide with your financial advisor where you want it invested, right? So upon death, when it's paid out, it is paid out if the child is above 18, it is paid out, right? But if the child is below, there's usually a trust
Okay.
that stands in place.
Okay.
Exactly. So at the point where that insurance is initiated, you'd have to put in a trust. So that person stands in if the children are below 18,
Okay.
right? But in quotes, the insurance is really not responsible to say, okay, you know what, we're going to only pay to this investment, or to you getting a house, or to you doing this, or to you doing that. No, the insurance are not responsible. That responsibility would lie with the financial advisor.
Okay.
That's the person that advises, right? To say, okay, you know what, let's do this, let's do that. But of course, that person's role is just to advise the trustee for those children. Okay, it is left for them to take it or not to take it. But most times, I've seen advisors, getting sued for not even providing that advice in the first place. Yeah, they get sued here. So that's why before you practice, you have to have an error and omission, insurance in place, in order to practice. So it's the responsibility of the advisor to advise that, okay, no, you do this, use this money this way, invest it, do whatever, So that's the way it works.
Okay, thank you very much. That makes a whole lot of sense. Volarima, what are your final words for us? We've heard all this, and I think I've been educated or re-educated in this. So what final words do you want to leave us with? I know getting a trustee is very important, like you've mentioned. Investing early, investing right is also very key. So give us the final words that we should take away from here.
Okay, so I just like to say this. Sometimes we are very emotional when it comes to our funds or our income and our money. The money that you not make from, you want to put me out to spend it. I get that a lot. And I tell people, the way you fall sick, even though some of us try to do self-medication first before going to the doctor, and that's the way it should be when you are making your money. There are some people that are experts and they're able to guide you on how this should be done.
Yeah.
It's disheartening sometimes when I see some grown up or some people in their late 40s, people being swindled of their hard-earned money. Please talk to a financial advisor. And we always say, not every good investment is good for you. Talk to a financial advisor.
And I have this question I forgot to ask earlier when you were mentioning people that would reach out to you, microfinances and credit unions to say, oh, come take this loan. I don't know how true it is, but I know I've heard of, some organizations posting people's obituary or sending text to people saying they will kill him or something like that if you don't pay the debts they are owing. So my question is, one, is this true? Two, how do you sorry, it's funny. My other question is, are there organizations or institutions that kind of what's that word now? That controls that controls financial institutions, the way they go about businesses, because
yeah, you are very correct. It was really on the very high side. It was quite rampant during the days of COVID.
Regulates, yes, that's the word.
2019, 2020, 2021. In fact, you see a lot of people come around and call you, hello, is that Miss Bola? They are coming to arrest one of the someone put down your number. And I think at some point is it NCC, people that control the communication, have to talk to all the networks to say it's their responsibility for them to block this kind of communication, because before you give out credit, do your due diligence. So it's your fault if you have refused to do the due diligence before giving out your money. So right now, it's actually a suable offense.
Oh.
Yes, it is in Nigeria. I'm sure it's very. I will say it's non-existent anymore. I'm not sure about that, but it's been a while I heard that it's been controlled.
No, great. Okay. Thank you. Thank you very much. Do we have questions? I'm just checking the chat to see if we have any questions. Or you can just unmute yourself. We'll give you about 2 minutes to see if you have questions. Okay, seeing none. I want to say thank you very, very much to Bola. I think it's about 7 o'clock now in Lagos. And then Rachel, you took out your time from your conference. Thank you so much. We appreciate you for coming over. And
Okay.
it's okay if you want to share your details with our audience so that they can reach out to you if need be. Yes, please. Shego, do you have a question?
Yes, I do.
Please go ahead.
Nice presentation. So, yes, I'm so sorry. I think
The audio is not
so,
too clear.
Okay, give me a minute, please.
Okay.
Okay, is it better now?
Oh, yes.
Yeah.
Oh, all right. So I was going to ask. I listened to the insurance narrative and even the trust one. Is there because to me, from the explanation she gave, she mentioned that you can dictate how the insurance policy will be shared, how the beneficiaries will benefit from it.
Okay.
Is there a shake of hands between, because it's similar to what Bolariwa explained from the trust perspective? Is it that it's just nomenclature, or there is a shake of hands between those two tools? I don't know if that question
I'll leave it for the experts, but I think it kind of works pari passu, in that your investment or insurance, this is my layman understanding, so you guys, your investment is a goal. You can have it or you should have it, but then yes, please, you can drop your question. But then the trust helps you ensure, it's almost like your will or your wishes are respected and are executed. So I'll leave it to Bolariwa and Rachel to please answer the question more professionally.
Okay. Okay. Sorry. In Nigeria, most of us, the trustees work hand in hand with the insurance company. So most, in fact, for them, for insurance companies in Nigeria, the trust is like an added advantage for them. So even it makes their offerings more juicy to their clients when they are profiling them. Because the truth is, like what Rachel said, my role is to ensure that the principal's desire is being met. I am not responsible for the way you squander. You want to squander, I want to spend it. So in that way, the trust comes. In fact, most times once they are meeting, when the trustee and the insurance people are meeting the principal, they are actually introducing the trust to them that, you know what, this it's advisable you put this in place. So you just ensure that you have tidied up all ends from beginning to the end. You can go and sleep and you are sure your health is in order.
Rachel?
Yeah, and over here, a trust, before you name somebody as a trust, right? It should be somebody, of course, that you trust. Yes, there is a shake of hands, but the responsibility is really on the trust, kind of, to execute what you want upon your person. The financial advisor is there to advise, and that financial advisor must provide that advice. Like I said before, or we can be sued, right? So we must provide that advice to say, okay, this is where we think you should invest. This is what we think you should do with the money. But your trust is there to execute what exactly you want. Like for the kids, especially if your kids are not up to 18, the trust is there to say, okay, you know what, this is what your maybe father or mother wanted, for the money to be used for. So that's the duty of the trust, of the trustee. So yes, there is almost like a handshake, I would say, because the financial advisor will provide the advice, but the sole responsibility is on the people that the money will be paid to. If we advise you to maybe invest in A, or to buy a house maybe worth this value, and the beneficiaries decide to do otherwise, then you can't hold anybody liable other than them.
So it's advantageous for any policy holder should have a trust, because that is when really you can ensure that your wishes are respected. Polariman dropped a question asking if policies can be altered.
Yes, policies are altered. Exactly. They can be, but it could be for too many reasons, right? A policy could have lapsed. That's where there is no sufficient funds to continue to fund the policy. If a policy can be terminated, but of course there has to be, okay, what are the reasons why you wanted to terminate it? And well, yes, you can withdraw from your policy, like I said, especially if it's a universal life policy. That's the only one that if it's a whole life or a term, you can't do that, right? So yes, we can annul a policy for a lot of reasons.
Okay. Thank you very much. It's 1 o'clock now by our time. We don't want to keep you guys longer than we had mentioned. So thank you very much for coming this month. Next month, we are hoping to have something on HR. Want to bring all the big boys and the big ladies in that industry, because I know so many of our people are looking at how to get their soft landing in their career and all that. So yes, hopefully we'll do something next month, and it might be a longer session for HR or human resources and all that next month. It's always every last Friday of the month. This would also be posted on YouTube, say from tomorrow, so please watch out. We have Absumo Communications. Valeria used to give us a whole lot of job back then in Nigeria. She has stopped giving us job. Help us beg her. So yes, that's what we do. We do media, we do communications, we do branding, we do events, special events, and a whole host of other things. We do advert production and management, and that's what we're good at. And we have also this program. We will be launching a magazine on Sunday. It's called Carol Magazine, helping the Africans in diaspora. Thank you very much. Love themselves and also preach themselves to the world. So that's who we are and that's what we do. Thank you very much for joining us. Until next month, stay blessed and make all the money, do all the investments, and ensure you and your family, you're well taken care of. So thank you very much. Have a good rest of your day.
Thank you for having us.
Thank you.
Thank you.
Thank you.
Thank you very much.